What's up everybody? Welcome to the Stocks channel. My name is Cory and today the stock market is pulling back to very critical support levels that the bulls need to hold to maintain the bull trend. First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. First things first, yes, I was on vacation and I did fail to mention that, but before I left, I did leave projections on all of the charts so that you would know exactly what I was expecting during my absence. And now I just want to quickly go over every single one of those projections because I want to start off exactly where we left off. And the last thing I told you is that I expected the indices to pull back to critical support before going for a next leg higher. So on SPY, I said I thought we would pull back towards the gap fill, and then the price target was 442.97, and as of today, we did reach that price target. So that is a direct hit on the downside, and the next target is a higher target up towards 460 from this bounce off critical support. Now moving over to the triple Qs, I had the downside projection at 366.16, and we hit that 3 times now. So the last 3 days we've hit that support. So again, that downside target has been satisfied. And the next upside target from here is up there at 393. Next up is the Dow Jones, and the downside target was 349.91. And as of today, we officially closed that gap and hit that downside target. And the next price target I have from here is going to be up there at 360. Jumping over to the Russell 2000 IWM ETF, the downside target was 188.16, and we just hit that downside target today. And then from there, the next upside target I have is going to be just above 203. And then finally, moving on to the VIX, I said we would likely go up towards 18 and then crush back down towards 14. And while that is largely what did happen in the VIX, we did not fully reach the downside target, which is right around 14.3. So yes, I still think the VIX is going down towards that target as we start bouncing from these critical support zones and heading to my higher price targets. All right, so now we've reviewed where we left off. So that begs the question now, what is going to happen? And you can clearly see from my projections that I expect higher prices from these critical supports. However, that does not guarantee I'm going to be correct. And you should never trade only in one direction and only depending on one idea to play out, because obviously we have a contingency plan is if we do start seeing SPY closing below 442, I am going to be expecting to see SPY 430. So 442 is that critical line in the sand, and that is the critical support for the bulls. And if we break below it, it's going to turn into a critical resistance for the bears to short from. So now these Bollinger Bands are starting to expand, and we are starting to get elevated volatility as a result of that, which means it's going to be huge whipsaws from here. And this has been very choppy price action, which is whipsawing both bears and bulls who are largely day traders. And as you can tell from my projections, I am mostly focused on swing trading. So while we hit the downside targets, we didn't necessarily hit it in the time frame that I've drawn, and that's completely fine as a swing trader because time is on your side. You simply need to be properly positioned, which means you need to focus more on where the market is going and making sure you're on the correct side of that move. So as a swing trader, the correct side of that move is still in the bullish direction until we lose critical support, and we can't say we're going to lose critical support. We need price action to prove it. So properly positioned here means this is now the buy zone, which means if you're bullish, this is the time to start taking on risk. And if you're bearish, this is the time to sit on the sidelines and wait for evidence of support to fail before you continue to short the market. If you shorted from 460 and you've been locking in profits on the way down, you've completely nailed it. But if you're still shorting and you're sitting on top of critical support, the odds are now against you and the risk and reward now favors the bulls, which means the best probability from here is going to be long positions and higher prices until we can at least test a negatively sloping 20 daily moving average and see if the bulls can break above it. So 442 is by far the most critical level in SPY to pay attention to, and we're getting bearish if we start to close below it. However, we are still bullish in the larger degree of this uptrend as long as we are still trading above 442. You can also see that's the 50 EMA. We've now closed the gap, and we know gaps typically get filled. And now that gap is filled and we're sitting on top of critical support, we are more than likely going to start seeing buying pressure to push prices higher. If price proves us wrong, then we'll be looking for 430 and we'll instantly start getting more bearish as we close below 442. But right now we are expecting higher prices until price action proves us wrong. Watch upside resistance between 448 and 452, and if we break above 450 to 452, we are likely back on this bull and heading to 460 and higher. On the NASDAQ 100 triple Qs, we were down 1.06% today, and again, we're sitting right on top of the critical support, which is the line in the sand for the bulls at 366, and we need to stay bullish at this level until price action proves us wrong and breaks below it. Just like I said with SPY, if you're still shorting at critical support, the odds are now against you because the risk and reward favors the buyers, and that means we are likely going to bounce from 366 and start heading higher towards 375. Above 375, we have the gap above 380 and that price target at 393. And if we break below 366 and start closing below it, we are very likely coming down here towards 355 to 357. On the Dow Jones, we were down 1.02% today, and we closed the gap to the downside, which was our downside target, and this is likely where we are going to start finding buyers between 346 and 350. Now, there is the possibility in the Dow to come back down towards 346 because that is the weekly inverse head and shoulders breakout, which means it is possible we test that breakout on a positive retest before we continue higher. But again, I still think the Dow is going to be trading at 360 in the near future. So even if the Dow pulls back towards 346, I still think that is a buying opportunity if you're a bullish swing trader and you agree with what I am seeing on the chart. If we break below 346, we do have a gap to fill at 343 and above 339. So 346 is going to be the critical support for the Dow Jones, with upside resistance levels at 353 and 356. On the Russell 2000 IWM ETF, we were down 1.32% today, hitting the downside critical support at 188. And again, this is another critical support line in the sand that if we start closing below it, you need to get a little more risk off and a little more bearish. Below 188, we have support down here right around 184 to 185. And if we break that, we're likely coming back down towards 178 to 180. The bullish scenario is we bounce from 188 and start heading higher towards 195, 198, and then into the 200s. And that is the scenario that I prefer. On the ARKK ETF, we were down 1.75% today, and we continue to close below 44.5, which was critical support. So it is possible the ARKK ETF is coming down to fill this gap towards 36. So you need to be a little more risk off while we are trading below 44.5, which means we need to delete the arrow and we need to stop assuming we're going to higher prices until we can prove it in the price action and see price breaking back above 44.5. Now there's a good chance ARK is waiting on Tesla, and if you pay attention later in the video when we do the Tesla analysis, there is a good chance ARK is going to benefit from that in the near future. But again, we need to see price breaking that critical resistance at 44.5. On the VIX, we were up 11% today, and the VIX is bouncing in the short term, but I don't expect to see the VIX going too much higher because I still expect to see the VIX crushing down towards 14. But again, if you want to be risk off, while the VIX is above 15, just be a little more risk off until the VIX crushes back down, but just keep in mind by the time that happens, we may have already seen a pretty decent rally. On Bitcoin, we're currently down about 0.78%, and Bitcoin is trying to hold this support zone right around 29,000. And again, this still looks like a giant bull flag until we break the support at 28,000. Below 28,000, we're likely breaking down and we should see high volume selling, but we haven't seen it yet. And we're instantly getting more bullish if we break resistance at 30,000 to 31,000. On Tesla stock, we were down 2.84% today, and Tesla has finally closed that pesky gap at 235, and we're getting very close to the critical support at 230. Now pay attention very closely on Tesla because I think there is a very good chance from here Tesla is reaching a buying opportunity in a very critical support zone to go on a very nice bull run all the way back towards the gap fill at 289 and that resistance zone right around 295. So what that means is if you are a long-term bull on Tesla and you don't mind trying to catch a falling knife, you would manage a risk right here between 225 and 230. And now that the gap is filled, we no longer have to worry about that, which means there's a good chance Tesla is about to start into a bull trend from this critical support zone. Now, obviously, you need to manage a risk here because if we slice right through it, then we have a falling knife scenario, which means we could go to much lower prices. That is why I say manage a risk between 225 and 230. If you're buying on the way down, you have your risk very well defined, and that is exactly what you want to do in this market is take on the best risk reward ratios, which means you won't need to win every single trade to stay profitable because you have your risk managed and you have very favorable reward in the event you're correct on these trades. So this is one of those trades that Tesla bulls have been waiting for. Now the opportunity is here. So look for that support, which is very strong between 225 and 230. And if we break below it, you're just going to have to expect lower prices. The upside resistance to pay attention to is between 248 and 255. And if you really want to be conservative, wait until we can close above 270 and then start getting more bullish then. On Apple stock, we were down 1.12% today, and Apple's projection was that we would bounce up towards 182, likely get a pullback, and then start heading higher towards 185. And we did not quite reach 182 because we found resistance at that negatively sloping 5 EMA. So what's possible from here is that Apple is trying to go down here and fill this gap at 175.77, which means we may go a little bit lower before we start heading higher towards 185. Now, the good news for the bulls in Apple is that the volume is drying up. And if you look at the bottom of the screen, volume has been drying up ever since we had the earnings sell-off. And that means we're starting to find support and stabilize right here around 177. So I do think Apple is getting ready to bounce, and I do have the price target for the bounce up there at 185. So I'm not changing a thing about the projection. It's not playing out exactly as we expected, but little times does the market do exactly what we expect. But bigger picture, I am expecting a stronger bounce either after we fill that gap or from this support at 177. So jumping back over to the S&P 500, keep in mind while I do have projections drawn on the chart and the downside projections have played out, you can't simply rely on an idea to be correct. You need to instantly be prepared to manage your risk if we break through this critical support zones and start to see high volume selling. Remember, you need to be prepared for the bear scenario and the bull scenario. However, we're favoring the bull scenario because we're in a bull trend and we've been in a bull trend all year long. It's a bull trend until it's not, which means if it's not going to be a bull trend, price action needs to prove otherwise, which means we need to see price action slicing through these critical support zones. I went through every single index and the VIX, and you can see very clearly that every single index is sitting right on top of critical support, and the VIX is in a position to be crushed. That doesn't guarantee we have to go higher, but the odds are still in the favor of the bulls, and the risk reward ratios are now favoring the buyers. So now it's time to sit back and let the price action do all of the talking and then act on our trade plan accordingly. Make sure your trade plan knows both scenarios and that you're managing risk. And remember, even if you lose a trade, as long as you consistently follow this process, you are going to be a profitable trader who knows how to stack the odds in your favor and manage risk by staying disciplined. If you want to come crush this market, consider joining Bank Trade Alerts or the Stock Channel Discord server. You can find out how to join either service by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.